Seed funding. You may have heard the term before as part of the early narrative for aspiring startups. But what exactly is it?
Seed funding is your first round of institutional capital from a venture fund rather than raising from individuals, families, and friends.
How do companies raise funds leading up to the seed round?
Prior to your seed round, you might bootstrap your company, so funding it yourself, and/or raise dollars from family, friends, individual angel investors who are willing to invest at the very earliest stages when that company is really nothing but a concept.
Fifth Wall is now dedicating resources to seed funding when it hadn't in the past. What's changed?
A few years ago, prop tech landscape especially was very different, both in the startup landscape, which was much smaller, as well as the actual LP or corporate landscape. At the time, folks were much more reluctant to partner with startups. There was much less technology adoption, and we didn't feel like at the time seed investing was right for us because we didn't really feel like we could add as much value. Nowadays, what we're finding is we're having more repeat founders start companies in the prop tech space who might not need quite as much operational support on day one. We're finding that our corporate partners are much more willing to try partnering with earlier stage businesses, so our value creation ability for seed stage companies is improving.
What unique advantages does investing early at the seed stage bring?
We are also, frankly, just very thematically focused and finding that we missed out in some instances on great opportunities to start building relationships sooner by investing at the seed stage. And so we want to start to invest earlier in those relationships with really strong founders in areas where we have a good thesis and where we believe the market's going to perform really well.
What opportunities are there now for seed investment that weren't there before?
Web3 and blockchain is the most obvious candidate here, where it really is net new for the most part. And so there's a lot of really interesting solutions that are looking at decentralization of ownership, that are facilitating crypto owners to own real-world assets as well, that are creating new asset classes in the metaverse by introducing real estate there. All of those things intersect with the built world, and we're being active investors in all of them.
Considering the state of the market, is seed stage investing still important?
For us, we go in eyes wide open about the risks of seed investing and early stage investing, and we're hoping to be able to find a few companies that we're able to continue to support further down the line, doubling down by leading or co-leading the Series A, the B, and other later rounds. I think ultimately every VC dreams of finding the next Airbnb. You only need to have, I think, a handful of really successful businesses to return your entire fund, basically. Make sure you subscribe to Fifth Wall's channel, and if you have any more questions about how seed financing works, feel free to drop those in the comments.